Hello, Tina Mitchell here with Highlands Mortgage and your local mortgage expert. Wanted to share a little bit about what's happening in the banking industry, talk a little bit about the Feds. Feds rocking steady, classic hit from the whispers. I hope that you're rocking steady in this crazy environment that we're in, because that's definitely what the Feds are doing. In the Fed's press conference, their statement was that they're going to keep rates steady. They're not going to move rates, and they also stated that they're going to continue the steady hand, buying up to $8 billion mortgage-backed securities and treasuries, and will continue to monitor in amount needed. So pretty much it's an open checkbook when it comes to the Fed. But pricing has stayed steady, and we're pleased with how the Feds are navigating through these challenging times. Pending home sales were down 21%, which was worse than what was expected, but it makes sense. The PSHI is an index created by the National Association of Realtors, or NAR, and track home sale contracts that have been signed but the transactions have not closed. So there can be many reasons for the contracts not closing. Loss of employment, obviously we're seeing that with furloughs and clients getting laid off. Banking liquidity issues, which I've talked about in previous videos. I'm going to touch base a little bit more on an update what's happening there. Extended closing dates because of banks' capacity, the level to be able to close the amount of mortgages that are coming in the door, and loan programs being suspended. I'll talk about that in a future video and some solutions to provide on that. But today I wanted to talk about a little bit more about the banking liquidity issue. And first, let's talk about servicing. Banks are not in the industry to hold on to your mortgage. They're in the industry to leverage what they have, sell the mortgage on the secondary market. But what they're keeping is the servicing, and they're receiving 30% of the principal and interest payment for residual income. Now, they do have to make the mortgage payment, and they are going to pay 1% typically upfront of the loan amount to retain those servicing rights. And typically, it's going to take about 3 years to recover the initial cost to get that 30% residual incomes. Now, regardless of whether the homeowner is making the payment, again, the bank has to make the payment. Now, this is becoming an issue for lenders because of everything that's happening in the environment with COVID-19 and people losing their jobs and going into first mortgage payment default. And so what the Feds did, or as FHFA, this is for the secondary market, Fannie Mae and Freddie Mac, came in to help banks or not. So I want to share what they recently came out with, limiting banks to only have to pay the principal and interest on forbearance for up to 4 months. So if clients go into forbearance, which I've talked about that in previous videos as well, in the forbearance and the encouraging and making it easy for clients to go into forbearance, but the banks are now only required to pay 4 months of the principal and interest payment. They still have to continue paying taxes and insurance, but they're not required to pay all of the principal and interest payments that they would lose if clients go into forbearance. Because remember, again, they're responsible for that initially. So this is something that's came in to help and protect the banks. But if they go and the consumer goes into first mortgage default, FHFA are now acting as a loan shark. They're going to purchase it, but charge 700 basis points to the bank. So first-time home buyer, they've got a little bit of a break of 500 basis points. And this is for primary and rate and term refinances only, no investment, no second homes, and no cash out refinance. So the problem is the average earned income is 50 basis points net after compensation, staff, cost of running a business, and all of those costs. So if you have an example of a loan amount at $300,000, the net income would be $1,500, but FHFA charges $12,000 to buy that loan. So it's like a game of Russian roulette on how the banks are going to fare. And so this really is causing more of a liquidity issue for the banks. So the solution for the banks, but not so good for the homeowner, is wait for the first payment, not sell, because then it doesn't fall under the CARES Act, because all of this comes into the CARES Act. So before selling it on the secondary market, wait for that first mortgage payment. And if they go into first payment default, then to start the foreclosure process. And this is going to hammer on the consumer's credit. Now, the solution too that the bank has is to charge more per transaction. So what holds for the future in the mortgage industry, I don't know, but I do know that for Highlands Mortgage, we represent a company that works with multiple lenders, so we've got a lot of solutions out there. The banking system is not going to crash. We made it through the financial meltdown, and we'll make it through this as well, but there's just changes that are coming up. Loan programs that are being temporarily on hold. You might have a challenge getting down payment assistance programs. The jumbo market is really freezing up because those loans can't be sold in the secondary market, so they're having to hold on to that mortgage. And again, the banking system, they're in the industry to leverage and to borrow on their warehouse lines of credits, which those are getting frozen, so they're getting capped in there. So solution on a jumbo is purchase money seconds are a really great way. Cash out refinance are seeing tightening, again, because that doesn't fall into the CARES Act, so it has more risk on the banks for cash out refinances. So you'll see a little more increase in payments. Some lenders not lending on cash out. We are, so there's still availability for that. And you'll see some guideline changes, higher credit score requirements, and things to make it a little bit less risk for the bank on that first mortgage default. So this is Mortgage Minutes for you today. My name is Tina Mitchell. If you need any mortgage assistance, I'm here to help and just making a difference in the world, one mortgage at a time. I hope that you're being safe, healthy, and have a blessed day. Thank you.